Since you're in this video, we're certain that you have profound interest in generating wealth. To make things easier for you, we took a closer look at the portfolios of the richest individuals. We won't be talking about the ways to make money. Instead, we will give you tips on how to fortify your wealth with the money you're earning.
Check it out.
What's up, guys? Welcome to Busy Scout, your intel for fintech and business. Go ahead, like, comment, subscribe, and hit the notification bell so you can get the inside scoop on how industry leaders make money and how you can too. Ready? Well, let's get started. Let's go over the basics. Knowing the difference between assets and liabilities. Assets simply put money in your pocket, while liabilities cost you money. The more assets you have generating extra income for you, the richer you become. With that said, here are 10 assets that make the rich even richer. Number 1. Cash in a bank deposit allows you to earn interest. Although the interest they pay these days doesn't keep up with the rate of inflation, money is still money. In fact, Apple, one of the leading tech companies, has over $200 billion in cash reserves. That's liquidity. Buy what they want whenever they want to. Second is the concept of peer-to-peer lending. This allows them to gain high returns through interest by lending their money to other people. At number 2, we have the ever-famous real estate. Now, why do a lot of people invest in this? Firstly, it requires little work and it comes with the monthly income through rent. Secondly, the value of property is always going up along with the demand for it. This is because of the constant increase of the population that results in more people looking for places to live in. What makes real estate even better is that it isn't just limited to homes. You can rent out commercial buildings for other people to work in or spaces for businesses to operate. At number 3 is stocks. Through stocks, you have the ability to become a partial owner of a publicly traded business. A business that issues 100 million shares can make you a 1% owner once you purchase 1 million of their shares. Common platforms that give you a chance to invest in the stock market through purchasing shares are Revolut, eToro, Plus500, Robinhood, and many more. At number 4, we have mutual funds and index funds. While stocks let you purchase the shares of a single company, mutual and index funds allows you to buy into multiple companies all at once. On a statistical basis, the asset class that performs the best is actually index funds. When you buy stocks individually, it's more likely to mess up. Beginner traders can't compete with the experienced companies and expert traders because they simply don't have the resources and information. But with index funds such as S&P 500, which is made up of 500 best performing companies, you won't need to worry about losing money through shares purchased in individual businesses. With S&P 500, you can get an annual total return of up to 9.8%, the average value that's been calculated through the past 90 years. In no particular order, the top 5 most famous index funds are as follows: SPDR S&P 500 ETF Trust, Schwab S&P 500 Index Fund, Fidelity's Zero Large Cap Index, iShares Core S&P 500 ETF, and Vanguard S&P 500 ETF. At number 5, we have patents. To protect their new inventions, people can file a document that recognizes them as the inventors and gives a detailed description of what their invention is and what it does. This document is called a patent. Patents require companies to pay money in order to use these innovations. Failing to do so allows inventors to sue them. Patents can make people a lot of money, and every great invention is patented. To help you understand, Slinky Toys sales have made more than $3 billion. Number 6 is trademarks. While patents protect inventions, trademarks protect phrases, words, and symbols. These include brand names and logos. Owning a trademark with marketable value allows you to license it out to people who would use it for commercial purposes. In return, they need to pay you. One popular example is Michael Buffer's famous catchphrase, "Let's get ready to rumble." After trademarking it in 1992, Buffer has since made about $400 million. Coming in at number 7 is people. You need to understand companies are imaginary concepts and that they are made of the ideas and products which result from the people's innovation and creativity. One individual can have a tremendous effect on a company. Take Apple's near bankruptcy, for example, that happened after the former CEO of Pepsi replaced Steve Jobs. Diving even deeper into Apple, we realize that the company's products, which are now distributed globally to billions of people, come from the revolutionary design of Steve Jobs. There are even companies that are made up of just teams, and in some cases, startups have been bought by bigger companies just to get those people. We call this acqui-hire. So make sure you take the time to hire the right people and make them feel appreciated, because they have the potential to make you a lot of money. At number 8, we got raw materials and commodities. The prices of these fluctuate and vary based on the market. As with every other financial asset, it's important to learn to buy cheap and sell at a high demand. One such asset is gold, whose price has increased by a whopping 278% over the recent 15 years. Another popular asset class nowadays is art. The rich have actually been spending crazy amounts on art because it has actually been beating S&P in the last 20 years. Same goes for rare vintage cars and collectible luxury watches, whose values are only going up as time passes. But before you get the idea of buying vintage items, remember to do your research to understand what you're getting yourself into. If you don't, you can end up even more broke than before. At number 9 are the infinitely scalable songs, books, information, and digital courses. One book has the potential to sell 1 million times over. This also applies to a song, digital course, information, or any other digital product. These assets can both increase your business's value while making you incredibly rich. All you need to do is to create a digital product that brings value to your customers, and when you're finished, promote and sell it to as many people as possible. Getting it right just once can set you up for a lifelong career of earning through that one product. Number 10, royalties. Let's say you wrote an amazing book. It's become so famous that a Hollywood studio wants to create a TV show out of it. Let's call the show Friends. The studio buys the rights to your book and offers you a portion of the money that they'd make. After 9 successful seasons, Friends wraps up and you've made millions. But wait, there's more. It's a concept called syndication. This happens when a TV series blows up and it opens up to numerous broadcasters. Making use of the previous example, the Friends cast are still currently earning around $10 to $20 million per year from the show's reruns. Anything associated with intellectual property can make use of royalties. And since you've done a great job of paying attention up to this point, we have a special bonus tip just for you. It's called the time money time arbitrage method. It's made up of 2 simple steps. Number 1, spend time to make money. And number 2, buy other people's time with that money. To elaborate, you need to find ways to make money with the time you have. Once you've done that for a while and made you enough income, then hire another person. Because of the chance you've given that person, you can pay him less than your average earnings and save the rest of the money you've earned. This is the foundation of every company and business establishment. Basically, the company generates money through the work done by people or employees. The company pays these people and keeps what's left. And what's left is called profit. And it's what you get after properly implementing the time money time arbitrage method. So, be smart and learn how to properly convert your valuable time into money, and eventually use that arbitrage to create a real business. Business owners thrive on this methodology, but most people don't do well in business since they don't know this fundamental method. But now you do. And we hope that with everything you've learned, you'll be able to walk the right path to financial success.